What up, chat? Can I get a mic check from anyone? Yo, Vikram, how's it going, buddy? Awesome, man. Appreciate that. Get started in just a second here. How's everybody doing today? How are we feeling about the markets? How's it going, Nick? Dobro sam, brate. Kako si ti? Thanks, Jose. Cat will probably make an appearance at some point. All right, looks like everything's working. Give it another sec, and we will get started. Any resource to learn trading? Yes, tools of the trade. All right. Let me get started here. Welcome everyone to the Tools of the Trade live stream. I'm your host, Captain Cole. Trip is not here this week. He is skiing in France, so you're going to have just me today. Before I get started, I want to take a quick second to thank our sponsor, Phemex, who's been supporting us since the beginning of the year. If you appreciate all the content we've been putting out for you guys, the Telegram channel, these streams, we'd appreciate it if you trade under our Phemex link. You know, we get a kickback there and it helps kind of keep the stream going. So with that said, I just want to say that nothing I say here on the Tools of the Trade stream is to me considered financial advice. I am not a financial advisor, and all this information is for educational purposes only. All right, so with that out of the way, chat, how are we feeling today? Phil, how's it going, my man? Let's take a look at the charts because I feel like that's what everyone wants to get right into. I'm just going to kind of jump right in. You guys can feel free to drop questions. Josh has seen me naked. That is not incorrect, I will say. But yeah, guys, so it's been a very interesting past couple of days, right? I'm just going to start with the high time frame Bitcoin overview. Just looking at the weekly chart here, right? Like we had this bullish SFP bear trap, right down here. We touched the weekly Tenkin. Everyone was screaming bear. We're going to 18K. We're going to the yearly open. And alas, that did not happen. One thing I do want to mention as we kind of look at this weekly chart real quick is take notice of this weekly key June level. This key June level is at about 30K, 31K, depending on what you're looking at. And this is a very interesting level, and I'll kind of get into that as we move forward. But, you know, just looking from here, you know, if we want to call this an order block, whatever, and it kind of lines up with this key June at 31.8, and then it kind of goes down to 29.2. This is an interesting level and one that I'm going to be talking about a lot today, just because I feel like that is where we are headed. We are headed towards 28 to 32K. But let's kind of just jump right into a 3-day, right? So last week, last stream, we discussed kind of, I think price was right around here, right before this 3-day closed. And I kind of mentioned that, you know, we could kind of dip down here to this key June and then hopefully go back up. I even kind of signal it can go to the bottom of the cloud. So, you know, that kind of did play out. Everyone was very bearish as we got to 20K, call it. And I'll just play this very slow just so we see what happened. You know, price puked right down into the key June. It was right here that people got very bearish. But when I kind of took a second and zoomed out and kind of thought about my system, it's very simple, right? I'm a Ichimoku trend trader by nature. So when I looked at price retesting mean reversion after, you know, what was this, a year plus of selling, this is the first retest of this weekly mean reversion that we're trying to flip to the upside. And when I look to the left here, I see that we had this order block, right? And we were still in here, But this was as good a place as any to me that if you were going to be high time frame bearish and kind of tell yourself the echo bubble is not over, then this is the spot you wanted to get bullish on, right? So this is where I was bullish. And obviously we kind of know what happened. We had a 3-day close here, and then the 3-day news started, and here we are today, right? Beautiful. So fast forward to today, we've had this beautiful bullish engulfing candle. Just looking at the 3-day here itself on Bitcoin, right? This is a level I don't want us to lose. So my line in the sand right now to maintain a bullish bias, let's not include this little SFP for the day. We still have 2 days to close this candle. So still plenty of time to kind of get back up there. And I'll get into that in a little bit. But point being is the 3-day order block right here from 24 to 23K. This needs to hold for me. So I don't want to see price closing the 3-day at all below 23K. That's my line in the sand. If we start closing below 23K, I'm probably going to cut my longs and figure out what's the next step. So I want to see us flip this level, right? So if we look now to the 2-day, 1 second here. Monitor cut out there, 1 sec. Come on, buddy. Hope you guys can still see and hear me. Hopefully. Come on, monitor. Sorry, some technical issues, boys and girls. Give me 1 second. All right, 1 second here. If you guys can still hear me, my second monitor kind of just crapped out on me, so I'm trying to see if I can get that back open. Bear with me. Bear being the key word. All right, you can at least still hear me. That's good. All right, so I'm looking at my other monitor. You guys can see me and hear me. That's all good. All right, so I'm not sure why my other monitor crapped out, but we're just going to keep going and pretend that everything's all good, right? So 2 seconds here. All right, come on. Do I even lift? Not as frequently as I'd like to. Only once a day instead of 3 times a day. Happy B-Day mistakes. Bear with me while I get my other monitor working here. Come on, what's going on here? Haven't. Ooh, I got back. No voice now. All right. There we go. Okay. As getting the chart. No mic. Okay. It's all good. We're back. Putting out. All right. Give it a second. Am I cutting out still? Are we good, boys and girls and germs? I guess we're calling us. All right. Give me 2 seconds here. Can I get a mic check? Bankai or Kanpai? Good. Okay. Back to it. So, as I was saying before, I was so rudely interrupted by my failure on the monitor there. So this is daily, right? We have about an hour until daily close. I'm not going to try to project out what's going to happen. Is this operation stays a daily? We're going to get back above this 25-2 level, right? I'd like us to. But, in my humble opinion, I do think this is kind of like a runway wick, so to speak. And this is something that Trip or, Crypto ISO talks about a bunch, where you basically clear out all the stops. There were a bunch of liquidations here. I said that you kind of long 25-2 on 10x leverage and you'd probably get away with it. We got to what, like 26.5-ish. And even if you long 25 to, the 10% stop is still probably what, 22.7. As long as we stay within this, as we kind of talk about this 24 to 23K range, that's kind of my barometer for maintaining a bullish bias, right? So if I look at the daily right here, we see that blue and yellow are kind of pointed at each other at 23K. I'm not that bearish to say we're going to 23K. You want us to hold 23K on a closing basis. So again, this is a pretty ugly 12-hour candle. Zoom into the 6-hour. We kind of swept this range. And now on the 4-hour, this is kind of the range I see us developing, right? So I'd like to see us trade between 26 and call it 23.8 for a good period of time, consolidate potentially, and then move up from there. So whether we eventually dip back down remains to be seen, but we could do something like this and then finally get a little pull and then go back to range highs. But, when I look at this 4-hour from an Ichimoku perspective, what I basically see here is a high time frame bullish breakout, right? 4-hour candle. We have our Kumo twist right here that occurred. We have blue line over the yellow line right here, and our Chiku span is above price. Now, when attempting a Kumo breakout trade, what you wanna do is you wanna get long on either the Tenkin or the Kijun. So the Tenkin right now is at 23.5. We just talked about kind of holding 23K as our bias, right? But in this situation, if I were gonna do a Kumo breakout trade, I'd enter somewhere along this blue line, wherever price ends up touching it. Maybe it's here at 23.5, maybe we range a bit, and then we come back to it at 24.1, 24.2. Um, and that from there, basically what I'm looking at, again, when I zoom out to 3-day, my target here is 31K. But keep in mind, we have the CME gap at 28.2, I believe it was 28.3. So once we get above 28K, that's kind of where I want to start de-risking some of my position. So if we do get a pullback into this blue line, the Tenkin, what I'm kind of looking for at that point is right, like at least a play to 28, which gives you a nice 4-to-1, almost 4-to-1 risk reward with a stop below 22.3-ish, call it. Basically, the cloud. We don't want to see price come back into this support level. We want to see it flip this level that we talked about on the 3-day. So that's kind of Bitcoin, right? we ran the stops here. I took a scalp Lido long and an ETH long. I puked ETH, but still holding my Lido, and that is kind of holding, so I'll take that for right now. But what this tells me is, we had this liquidation wick. Once we came in here, and I'll show you guys on Hyblock in just a second, longs kept adding right here, and that was kind of the issue here, right? Whenever you have a shakeout wick, what you want to see is shorts come into the low, and as I pivot to Hyblock, I'll get into that. But point being, longs started piling in as we came in for the potential higher low, and then what we did, we made them puke. We swept this low, and they puked. So I'll pivot to Hyblock, and we'll kind of take a look at like what we've been looking at here, because Hyblock is pretty instrumental for me when looking at liquidity. It doesn't work as well in a trending environment, but fortunately, with prices range bound, like it seems like we're gonna range for quite a bit, at least for the next couple of days. This is kind of key to understanding markets and where the liquidity might be. So one of the big things I look at when I look at Hyblock, first I like to look at the short to long liquidation ratio. So right now we have a lot of longs in the market, right? 558 to 129 shorts. It's approximately like a 5-to-1 ratio. So it's not ideal, but we did wipe out about, so we were at a peak, we were about, let's see here, about 37 bill in longs. And right now we're sitting at a humble 23. So we wiped out about 14 bill of long liquidity on this on these past two moves down. So that just tells me, let's zoom in for a second. That's really just telling me that we did get healthy, over 10% pullback from the top. And what I see here, and what I want to show you guys, if you kind of zoom in, is when I see shorts come into the low like this, we had 54 mil worth of shorts kind of come into the second higher low. These longs got ran that came in, the green dots, and then the short came into the low. It tells me that sellers are being aggressive, trying to cause a further cascade, and they were unsuccessful. And when a short position comes in and it gets stressed and it wants to puke, what it tends to do is, how do you close a short position? Well, you have to buy back your position with a long. So this could just be shorts closing. But in my mind, the trend is up. So at this point in time, it doesn't make sense to assume that we're gonna kinda capitulate further. I think we do a retest and sweep some of these highs at 25.3, 25.4, potentially as high as 25.9. I think though that's as high as we're gonna get for the time being. If we kinda zoom back to the chart, right? And we kinda see, like, if this is the range, I'll call it, let's see here, if we draw, like, a nice little range. The range high is 26.2, call it, and what I'm looking for here is like an underside retest, right? So that would be around 25.7-ish, call it. And what we saw on Hyblock just a second ago is we saw a lot of short liquidity going all the way back to 25.8. So if we get, we have about 200 mil in short liquidity at 25.8. If we get back to that level, that's somewhere I'd be interested in potentially taking a head short, but also potentially waiting to see the reaction, right? Like, if we slip up from there and we start making higher highs, it's probably up only again for a good period of time, which is great to see. I'd love to also let you guys know, if you guys have any questions or tickers you wanna just drop them in the chat, and I will look over on my other monitor and hopefully get to each one of you guys. Brain's asking tips on how to build a profitable trading strategy. So I think the real point when it comes to profitable trading strategy is that you have to test a lot of things out to see what doesn't work until you figure out what does. And a lot of times, especially as it pertains to trading, what you want to do is try a strategy and give it time to see if it's going to play out, right? So for me, that was basically Ichimoku for a long period of time. The edge setup and Kumo breakout are two of my, quote unquote bread and butter setups that I like to really take in most trending environments. And here's the thing, right? I say trending environments because I realize Ichimoku works really well when we're trending and we catch these cool moves, right? Like the edge to edge and things like that. But what I've learned over the past several years journaling and taking, L's to the face is that it doesn't work well in range bound environments. So, when you're putting together a profitable trading strategy, you need to know the limits of that strategy. And that could just be, well, Ichimoku is great for trending environments. If I can identify that that the price is trending, right, with higher highs and higher lows, or lower lows and lower highs, I want to pivot to a trending strategy. That would be Ichimoku for me. Now, when price is ranging, I realize that I'm getting chopped up a lot, right? Ichimoku is not that good at range bound markets because it's a trending indicator. Captures up to 80% of a given trend. So when I noticed that, I had to kinda go back to the drawing board and figure out what type of strategy can I use to kind of still make money when price is not trending, right? So a lot of the times, price does range for the majority of the time. It trends for a shorter period of time. Obviously, in Bitcoin and the crypto markets, those trends tend to be, overblown, and we kinda get nice moves from them. So there's good money to be made, but if you're trying to trade all different types of uh, market environments, you have to adapt. This is where kind of liquidity theory came in. I'm happy to take questions on it, but I'll kind of give you the overarching point is that when prices range bound, right? I'll give you an example here. Let's see if I can just pull something up. Yeah. Uh, here we go. So when prices range bound, right? And I'll go back to, for example, here. This is actually a pretty decent example. When price is in the tight range, we have a range high, range low, whatever you want to call it. Price just goes up and down, right, ping-ponging you within the range. So if you look back at Hyblock, I'm sure once we got to this retest at, let's say, what was it, 22.4, we had a lot of shorts come in, and that's what pushed us to the range lows, and then we kinda ping-ponged again. Now when these shorts came in here and here, all we were doing is building up short liquidity. So if we checked Hyblock, we would have seen that there was a lot of short clusters right up to 26.7 or 26.5. And that's kind of what you're looking for in a range bound environment. You're looking for basically pain points where positions would puke, and you're trying to get tighter entries with tighter execution so you can kind of capture smaller trades, right? When you're trading a range, you can't be greedy. You can't go for the home run swing trade. That's just not how the market trends. So in a range bound environment, you really have to adapt and take the smaller wins, right? So people that were in the tools to trade Telegram the past couple days were taking some range bound trades and kind of moving our stops and profit as quickly as we got them just because it made sense, right? When you're scalping, you need to go for quicker and more aggressive moves. Whereas if you're trending, you can be a little more risk averse and kind of wait for that trend to kind of materialize, right? So prices were at 20.3. We had this huge nuke, and then we had this further nuke. This was as good a spot as any, right, on this higher low to kinda get long. So, at that point, um, yeah, that's kind of the gist of, building a profitable trading strategy. You really have to take an approach, try it out, journal the outcomes, and then see what works and what doesn't, and then kind of start to dissect some rules for yourself, right? Like, so when I'm scalping ranges, I'm aggressive to move stops and profit as soon as I'm at profit. When I'm trading trends, I give myself more leeway for my thesis to play out even if I suffer some drawdown in the beginning. So that's kinda my go-to for, trading a profitable or creating a profitable trading strategy. Let's see what else we got here. Uh, GPT, I could take a look at that one real quick. Let's see what we got here. GPT is a Phemex one, I guess. It's fair. Ooh, man. What historic price action we have here? This must be a newly listed coin. I'm gonna scratch this because there's just not enough historical information for me to, actually do anything with it. Taking your full retracement from 69K to 15K, do you think sometime in 2023 we could touch the 382 to 618? That would be 35 to 48K PTC. Yes. So that's actually a good point you brought up that, 38.2. I just wanna take a quick second. I'll get to your question first. We take this, giant range we were in, from 60 or from 15 to call it 69, right? We put some fibs on it. The 382 is 35.7. Now, in my mind, the daily PG or the weekly PJUN, sorry, is sitting at 32K. That's where I start to risk off, assuming that this is an uptrend, right? Can we do the 38.2 blow off top and then nuke, right? We do something like this and like that? Absolutely. I'm not necessarily calling again for a full-blown bull market at this time. I think there's a lot of macro overhang that just is uncertainty, right? But at this point in time, I do think that we are still in the quote unquote echo bubble, although it might have seemed like it kinda ended here and it kind of capitulated here. This in my mind is still very reminiscent of, 2019, I'll show you guys why. You know, all this price action we had after breaking out from the bottom was really just like consolidation. So while this doesn't look like the cleanest kind of consolidation, but let's zoom it back. So yeah, we had the Bitstamp hack here, and this is kind of where I think we're at, right? So like we're not here anymore. We're kind of in this range. This is the range I think we're playing with. So we made higher highs, we broke some lows, we made a higher high again, and we kind of consolidated. We're doing the final blow off. I am treating this echo bubble similarly to the 2019 echo bubble, just because it shares so many distinct similarities. Like even this 3-day edge to edge is very reminiscent of 2019. So in my mind, do we go to 28K and pause? Do we go to 31K and pause? I don't know, but I do know that my targets right now are kind of this 28 to 32 level. Once all that CME gap, I'm kind of curious to see what happens. I know some good traders are looking at 28Ks as swing shorts. And when I kind of also want to talk about, that 38 fib that our buddy Amos mentioned. So one thing I do know is that when Bitcoin trends and it trends hard, it usually doesn't give people the ability to get in. So one thing I do like to do, and something I've noticed in my journal, is that 38.2 fib retracement tends to be a really good place to get long, because a shallow pullback, everyone's looking for some form of mean reversion or looking at the nearest support level where they could flip it. But to me, the 38.2 is what, at 23.8, call it, from the top here. That to me is as good a spot as any if you believe that the trend is up and you're a sideliner waiting to kind of get in. This is the kind of level I'd be looking at. So this 23.8 level, 23.8 level is a 38.2. And again, when we zoomed out, we talked about this 3-day order block here between 23 and 24. We don't want it below that. So, between 24 and 23K, I think that is the ideal re-entry. So 23.8 takes us basically like the point of breakdown on a lot of the stuff. Right, like right here-ish. So 23.8 is probably the key level for me if I was sidelined or I wanted to compound on the trend where I'm looking to bid. Someone asked Sushi, I'll get to that in a second. Gun to your head, up or down for now? Gun to my head, up, just because I think we're gonna go retest the range high and wipe some late shorts out. That's just my gut opinion. What else we got here? Looking like a range high reversal, potentially. Sushi. Okay, let's take a look at Sushi. And then I'll get into ETH and some other alts I've been looking at. All right, Sushi. Had this range drawn out, right? So Sushi is still in like a giant range. It came into the range low, so it's actually interesting that you mentioned Sushi. Who said that? Sultan. I appreciate that. It's definitely one to keep an eye on, just because it has consolidated in this range a while. And if Bitcoin does break up above 20 or goes to 30K, it would make a lot of sense to me that a lot of these alts that have been consolidating near the range lows get a move at least to the range highs, right? And if you notice here, we have a big cloud, but we do not have an edge-to-edge setup just because the blue line is below the L line. But there is credence to think that if BTC is going to move up, alts are going to move up with it eventually, and the range high on Sushi is about $1.90. That's probably as good a place as any. So I don't know that from here I'm swinging long on Sushi, but I guess if I break it down, yeah, the cloud's pretty bearish, unfortunately. We're below the cloud, we're below the Kijun, we're kind of retesting a Tenkin. We're actually gonna get a bearish crossover again soon. So, yeah, I wouldn't necessarily punt Sushi yet, but if we can actually get back into this 120-ish, 117 order block, if we can make a higher high, test the Tenkin or test the Kijun, sorry, come back in, consolidate here and move up, that would probably be where I'm looking for longs. Or worst case scenario, we have this little area here around the $1.11. Those are probably my two spots to look at. What else we got here, ladies and gentlemen? Nick, how's it going, man? Long and strong, absolutely. I think Binance wicked to 50K recently. I did see that on the Binance USD chart. Yeah, exactly. It's a prophecy wick, right? So when I look at the daily on Bitcoin, I'll go to ETH in just a second here. But when I look at the daily on Bitcoin, this is like almost like a pinball, right? And like this gets everyone very bearish. But in order for this to be an SFP, you need to see a breakdown happen from here. So if we get below 23K, that's probably a good indication that it is a reversal, right? Like the range high reversal Son mentioned. But the fact that we're still just hanging out here for the next 44 minutes, hopefully, tells me that it could just be a clearing of all the stops before making another higher high, right? We can draw diagonals, we can draw cool charts and shit. That's all good and dandy. But in my opinion, I maintain this bullish bias when I zoom out and I look at the 3-day. There's still 2 days left in this candle. If I check the volume, we're building the volume up. We're about halfway through the previous 3-day volume candle, and it's only been 1 day, right? So if you extrapolate that, the volume is going to be 3 times as high. It's going to be much larger than the previous one, and that tells me that we're most likely seeing buyers step in, and we're probably going to trend up. The one thing I do want to mention, though, is that even though this 3-day edge is at 31.8, 32K, if you notice right here, and this is something I've learned from Ichimoku, is that it flattens out here at 29.2. Those little flatten out areas sometimes provide really nice areas for exits just because, if I'm bullish and I got in at 20K and the price gets 29K and starts stalling, is it really worth giving up and round tripping the whole UPNL to go back instead of just taking some off here and rather than waiting for this 31.8K move? Not necessarily, right? So when you're managing a swing trade, I think it's very important to understand where your invalidation is. And I feel like also these live streams help me kind of articulate that to myself and to you guys. So when you're managing a trade, right? I think this is important to kind of get across to you guys. You have to understand what type of trade it is, at what point you're wrong, and where you believe that the trend may have reversed, right? So we just talked about that 23 to 24K order block. So I think it's key that if we don't hold that 23, 24K order block, we start doing the 3-day close below that, we start kind of puking below that. That's probably where I'd have to cut my 20K long, just because I'm not going to round trip the whole thing. I'm willing to give some to get some, and in a swing trade, that's what you are allowed to do, or that's at least my strategy of doing things. In a range bound market, it'll be more aggressive with profit taking. But again, I see the potential here for a 50% move, right? So from 20 to 30K, it's a 50% move. So why would I necessarily TP early without allowing the trend to play out, right? So we talk about higher lows and higher highs in Bitcoin market structure. And all that tells me is that, we put a higher high in here. We need to put a higher low, obviously, before 19K. I don't know that I want to see it back in this 22-ish area. And because when I zoomed out and I saw this 23K, 24K order block, this is the level, right? And that kind of coincides with, let's say we close here-ish and then we come back down. And the Tenkin right now is at 23K. So if you miss the Kijun entry, it's nice because you get the Tenkin entry as well. So this is kind of how you compound along a swing trade and where you learn how to manage a trade. So, I'm not going to cut longs. I think if we got back below 22.5, call it, I'd probably cut my longs for a 10% move. At this juncture, I'm going to be a little more patient, let PA play out, and see what the next couple of days brings us, especially going into FOMC. I really feel like, we have at least FOMC is a week from today, or week 8 days from today, right? The 23rd, next Wednesday. So we still have a lot of time from now until then. So I'm kind of bullish, and I think everyone else should kind of remain that bullishness just because we just had a huge upside. We wiped out a lot of shorts. Yeah, we pulled back a little bit, but we're still holding. So let's pivot for a second, talk about ETH. We have the Shanghai upgrade coming in a couple of weeks, I think, right? Beginning of April, it should be. See new checks full. I will get to that one. We have 3 CME gaps, 28.6, 35.1, 53.7. That's true, but the one at 28.6 to me is most important because that's where we nuked or kind of going into the bear market before we had the whole FTX debacle, and that's where we lost that 30K support level. So just looking at it from a high time frame perspective, one more quick second on Bitcoin. This level in my mind, this 30K level, 29K level is kind of key. I don't think that the first time we test it, especially we have some order block here, that it's necessarily going to be just a sweep through. It might be. We might just go straight to the Kijun. But at the same token, I have to be cognizant that you can only extract so much from a move. And to me, getting to 29K, front running that right with the gap at 28.6K, that makes the most sense to me for right now. So 28K is my first, probably third take profit. Second would be 31.5, and then I'd kind of let the rest ride, see if we get higher. Otherwise, I close it below 28. What's up, Kiwi? We got Kiwi in the chat, guys. All right, let me pivot to ETH before I kind of bore you guys to death with BTC. And Mr. K is looking for Lido. I will get to that as well. Nice. Okay. So looking at ETH for a second. Very similar to BTC, except we have the weekly key June at 22K. So those of you who've been wondering why my ETH target is 22K, it coincides with the weekly key June. When I look at the 3-day edge setup, right? Let's see here. Price table. 22K as well. So the 3-day weekly key June, the 3-day edge is at 22. Now we do have a range here, right? We didn't sweep the lows post FTX, but we've been kind of consolidating on this giant giga range, call it. Do we sweep the high just above 2K? Maybe an SFP like we did on BTC at 25K. I'm not sure, but 22K is as good a target as any. But again, I will warn caution. As we approach 20K, I will probably shave and size them off. Just because it doesn't make sense again to round trip Someone's asking, you manage trades level to level or hold all the way up? So it's an interesting question you asked and asking. I want to take a second to talk about that. So, when I'm looking at a swing trade, right, and I'm thinking high time frame, I'm playing a 3-day chart, I think it's key to kind of understand the duration of the trade, how long you expect it to play out. So in the case of Ethereum, right, we have a fundamental catalyst, which is the Shanghai upgrade that's happening beginning of April. And at this point, the fact that we are 2 weeks away, price is in the 3-day cloud. The setup is going well. We have yet to try to put in a higher low. We can look at ETH in a second. It makes sense to hold it as long as possible, right? So those of you who know me since 2019, I've always kind of held the belief that, swing big, right? Bet big, bet early, and walk away. This is a similar situation, but as I've kind of matured as a trader, I do feel that I need to be more cognizant with my execution, especially as it relates to managing a trade. So I am more prone to take partial profit along the way. I do like to hold, a good swing trade from a good entry and try to hold it as long as possible. But I think the way I've developed as a trader over the last several years, I've learned to also manage my P&L in a better way than I have before, where before, I could stomach round tripping the whole thing and watching it still go back. I held this ETH swing trade from 137 to 282, and it came up to 260, and then came back down to like 150, and then went back to like 281.90. I missed my TP by a couple of cents. And from there, it ended up going to like 240-ish and then going finally to 300, but I TP'd at 282. So I held all the way through, but when I journaled that trade, it was a great trade. But looking back, I wish I had managed differently, right? So to answer your question kind of bluntly, I am playing it level to level, but mentally, I'm not necessarily just taking profit every single, take profit. I'm letting the trend play out and seeing as much as I can kind of maximize from it. Andrew said I jumped this question. How do I adjust my itchy strategy from swings to scalps? So when it comes to scalping with Ichimoku, I don't tend to use it for anything other than the Kijun to find out potentially good entries. So I'll break down, let's say that ETH trade that I took earlier on the 15-minute. Where was it now? 30-minute. Something, yeah, it was 30 minutes. Yeah. So we came down to the right here at like 1790 or 1700, 1690, and we were just front running this 30-minute Kijun. So I was really only looking at the mean reversion, and then again when I looked at it from this, it was back in the range. It seemed like as good a spot as any to kind of go long. Obviously puked in at the lows, pretty much literally 1675. The less to be told, I don't necessarily think using a trending indicator for scalping is that effective, at least Ichimoku, right? Some people might use MAs. But personally, I find that just following price action is usually my best guide when it comes to scalping. Ichimoku is a great indicator for capturing up to 70% of any given trend. And price doesn't trend as hard as you think on lower time frames, right? It's much cleaner to see a 4-hour trend, as you can see here, or like a daily 3-day trend. But on the 5-minute and even lower, you get a lot of chop, right? So like, yeah, you see this move, but like a lot of times price just chops around and gives you false signals. So rather than taking a Kumo breakout trade, you get chopped up here. So price ranges a lot and consolidates on a low time frame, where I don't think Ichimoku is necessarily the best indicator or system to use when scalping. I prefer to use liquidity-based system, using Hyblock to kinda execute, identify where the shorts are in the market, where the longs are in the market, and where I'm potentially thinking about getting back in or finding a pain point in the market and kind of taking it from there. Very interested in learning how to read the heat map on Hyblock. We can do a little overview on that. Alright, so let's get to the heat map here. So heat map's kind of nice, right? Because it gives you like, we have the liquidation levels that everyone's very familiar with, but the heat map gives you a very clear-cut picture of where, uh, the positioning in the market is. So if you're not familiar with heat maps in general, the brighter the color, the more position or liquidations there are at that level. The darker the color, the less or very little there are at that level. So, looking at the Binance 12-hour heat map, we see that a lot of shorts are actually coming in. So this area was green and has only gotten more yellow at 26.8, which tells you that there are shorts coming in and their liquidation price, or price necessarily where they were gonna puke, is gonna be around 26.8. That's on the 12-hour. So then, what we'll do is we'll zoom out a little bit and see, all right, well, what about all those longs that came in earlier? We can see that a lot of them are around 19K. We do have some here, 23.8, 23.9, which again gives credence to that 3-day order block, but we really wiped out a lot of the shorts up here and then wiped out a lot of the longs out here. So the way to use the heat map, in my opinion, is you do a broad overview to see kinda where price is in the last, 12 hours, week, month, whatever the case may be, and then form a bias, right? So, okay, price just ran the highs, we still have some yellow over here that tells me shorts are coming in, and there's potentially liquidations above this high. So that just tells me that, okay, well, if I am bearish, I don't think necessarily shorting a breakdown of whatever price we're at, right, 24 something, makes a lot of sense. I'm gonna wait for some sort of retest right now. Is that gonna be the range high? Is it gonna be a lower high from the range high? That remains to be seen, or is it even gonna be a sweep for the high? But I think a lot of times when looking at price action, it's key to understand where the pain points are. So right here, there's about 900 mil in short positioning that would probably get tested if price goes back to 26.8, which again would be a sweep at the current high. So that just tells me that I'm not necessarily trying to short a breakdown here. Again, my bias is up, but that is how you would read the heat map. And I guess let's take a look at ETH real quick to get another example of that. So ETH's a little more interesting. We actually have a bunch of liquidity here. So if you look back here, right, as we kind of came into 1760s earlier this morning before CPI, there was not a lot of short liquidity. Like, yes, we did run it, but most of that was in part because of Bitcoin. And the fact that, as we kind of went lower, there were longs that built up here, though, if you notice. So into CPI, a lot of longs came in, and then price got greener, greener, greener. Eventually, we came down into here to test it, and they puked right around here. And then apes were along the lows again, building, building, building liquidity as we see the yellow, and then price puked into it. So what I tend to observe and what I think is helpful to note is that whenever an area gets from green to yellow, that tells me it's a pain point that the market likes to test. So yes, we have a pain point here at like 1640, 1650, um, but I see a lot more liquidity up here between 1770 and 1800. That to me is where the real pain is on basically Ethereum. So the pain trade right now, gun to my head, it's definitely gonna be up to be, cut it short and sweet, and that's kind of the gist of how to use the liquidation heat map for high vol. Alright, quick sip of water, and then we'll get to more questions. What are my thoughts on Starkware? I remember when I was in college trying to get an ICO allocator or private sale allocation to, the Starkware private sale, but because I was a student, I was told, "No, no, no, thank you." So I don't know too much about ZK rollup, behind it, unfortunately. I just tried to trade the Ponzi's and see what gets me the most money. So let's pivot for a second, look at Lido, because that is a long I'm still holding. Unfortunately underwater, but, still holding. Let's take a look here. Lido. And we'll look at liquidity in a second as well, right? Alright, so Lido, lower high retest. Where did we stop at? The previous range high, this bearish order block right here. And, if we're looking, we just talked about ETH going to 2,200, and we know that Lido is LSD derivative of ETH, and it just makes sense to me that it's gonna have higher beta. So if Bitcoin's gonna go higher, ETH's gonna follow suit, and obviously, ergo, Lido will as well. Now, when I zoom out or zoom in, sorry, to the 4-hour candle, I see a potential Kumo breakout forming. However, we can't take a Kumo breakout trade until the cloud flips green. And excuse me. Looking at it from this perspective, we still have quite some time before this bullish crossover occurs, and it's not even showing that it's going to occur in the next day and a half, so not even by Thursday. We'd either need to make a higher high for this cloud to flip bullish, or we need more range, right? Chop solidation, as I like to call it, before this cloud eventually turns bullish. So as long as we don't make any lower lows, we are probably good on Lido. And that doesn't mean I'm not going to puke the scalp beforehand. But it is what it is, right? So I like Lido a lot. I think just from a fundamental perspective, it makes sense. Would I be surprised if we kind of held this low here at 26.6 and moved up from here? No, because it's a retest of the previous consolidation. You can say we're flipping this order block here, or in the process of trying to flip it, right, do an SR flip. So I'm pretty bullish on Lido in general. I think that's definitely a coin if we're gonna go higher, to be cognizant of and try to take scalp longs for. AI meme coins doing well. FET, Ocean, RLC, GRT, spot bag only because volatile. Yes, alts are very volatile. You can only spend more than you can afford to lose. Matic as well. All right, let's take a look at Matic, and I'll take a look at one of those AI coins. Let's see what we got here. Matic, the XOSD special, right? Interesting, very interesting. So I see it on first glance. Actually, I think I even mentioned this to XO in our little Telegram channel. 124 should cap it just because this is the daily key June, and we kind of we broke above it, we held it, came to it, broke below it, and now we're retesting, right? So the key June is a dynamic 50% Fibonacci retracement, which is basically the mean reversion of the trend. The trend here was up, and then we broke that trend, and now that the fact that we're trending down, the mean reversion of this downtrend is now basically the line. So the L line at 124 is kind of 125, kind of capping price. It is consolidating. Now, when price rejects from a level, what you want to see is that it actually follows through, right? So it's not enough to see rejection of price. You want to see some sort of follow through. You want to see that, sellers came into the market, they rejected here, okay, but you want to see a break in market structure. So in order for me to get super bearish on Matic, I need to see a break below these lows around 114. Until that happens, I'd maintain a bullish bias, not necessarily at this price, but the fact that we can kind of chop around and then maybe make a breakout later. But Matic's definitely a coin that has some fundamental oomph to it, so to speak, right? Whether it's the Polygon layer 2, it's the preferred whatever. I don't get too much into the FA. I just know that if people talk about it, it might have some FA, so it might be worth paying attention to. I don't necessarily like Matic for long just yet. I think we can go a little lower and grind out this SR flip here, right? So it doesn't necessarily mean we can't chop around, come back into it, and then maybe go up, maybe even break down, right? If we break down, we short the retest of this like 111, 112 area. But again, I do have bullish bias. I'm gonna try to keep that out of it as I approach these coins. Let's look at FET, Ocean, RLC, GRT. All right, what's FET doing? Fetch AI. I missed that whole AI narrative. I know it's a big thing, and obviously had a sick run up. It's interesting just looking at the chart here. Had this consolidation range that was resistance. It looks like we flipped support, and got to move off it. Now, whether or not it's a good long, that remains to be seen. We are getting okay, this is actually a good example of a bullish Kumo breakout that's going to occur about 6 periods from now. So basically on Thursday, we'll get this Kumo twist. And this Kumo twist would initiate a long position. And where do you want to get long after a Kumo breakout? Well, usually along the Tenkin, so that could be at 41, 42 cents. Or it could come back to retest the cloud at 40 cents. So I wouldn't necessarily just enter longs here. It did have a nice pump. I don't think, first of all, you should be chasing any longs at this juncture. for swing longs. But, if it does come back, if it chops around, goes sideways like big BTC does, comes back into this level, maybe reclaims this level, and then maybe makes a move up, or potentially comes back into here, chops around here, we get the twist, and then goes up. Obviously, if we break below the cloud or break below this, high or low, you'd probably wanna cut that. What else we got here? Perp and Anchor. Perp looks strong, you're not sure why. I have less of a clue than you do, my friend. But let's take a peek. And then I will actually look at the liquidity on the ones we just mentioned to see if anything lines up. Actually, before I do Perp, let me go to FET and see if there is any liquidity that can kind of line up with what we're discussing here. So, nope, no FET. So no, we're not. What's the next one? Perp. Nope, Perp. FET Ocean. Ocean. Let's take a peek at Ocean. Okay, so we look at Ocean, 47 to 342 long short, which is almost like an 8 to 1 by my basic math. But we do see that the first thing I noticed just looking at this chart is that the green dot coming in right at the lows tells me, and the green dot here tells me that people are trying to long the lows, which is never a good look. Excuse me, which is never a good look. So if you are looking to punt long on any of these alts or scalps, what you want to see is red circles coming in at the lows. We could have one here. But basically, you don't wanna see a lot of longs piling in because those are basically, open interest showing that market orders is spamming the book at the absolute lows, and it's very likely that price will come back to test those, positions. Because, again, when price is range bound, um, basically price likes to test, retail stops, retail liquidation levels, whatever you wanna call it. It likes to test the range essentially and force liquidity, right? So liquidity theory is basically describing how price moves in a range, and overarching game theory behind it is that when price is range bound, no one gets a free lunch, right? Like, there's no such thing as a free lunch in the market, so it doesn't make sense for, longs to get away with it, quote, unquote. So if I see longs longing the lows, I think they'll probably get run before a serious move happens, and as we can see, we still have some liquidations here at 40 cents, 39 cents, and, yeah, 40.7 cents. So that kinda lines up again with what we were talking about with, that Ichimoku level, testing the cloud, testing the Tenkin before the move up. But let me move on to Perp. So Perp actually looks kinda interesting here. Let me zoom out for a quick sec. So again, we had this range, one we would call it, had a range, broke out above, retested the range, made a much higher high, consolidated, broke down, and then retested the range and bounced off again. So, in my mind, this, call it 73, 72 cents level is probably key. I don't wanna see us make any lower lows, obviously, from a daily perspective. When I zoom in, however, it does look like we're trying to flip the Kijun, which is, again, that dynamic 50% fib level. And the fact that we're kind of we broke above it, we closed above it, we retested it, closed above it, and it looks like we're gonna close above it again in about 20 minutes. That's a good sign. However, though, we see that the cloud's right here and there's a flat cloud right here, so we are approaching resistance. So you have to keep in mind that even though from a swing perspective, price may look good, we are technically approaching resistance. So, I wouldn't be swinging for the fences. I would be if you have a bullish bias, I'd look at it from the point um, that it makes more sense to look at things from a trending standpoint versus a range bound standpoint. So in here, I feel like we might have just set a range, right? 97 cents to 90 cents, call it whatever, and we're gonna ping pong around the range. So, like, I wouldn't get bullish expecting a breakout, but, if I was taking a scalp long, maybe with a stop below the low, something like that, coming back to the range high, coming back down after that, something of that nature. Let's take a look here. Totalizer, I should get a higher quality mic. Actually, my, monitor died, so that's probably why my mic doesn't sound as crisp as it does before. Missed ETH, yes, unfortunately, but, the quick broad overview is that it's following Bitcoin, but I think we should actually take a look at ETH BTC to kinda get a better sense for things. Let's take a look here. Turn this off, this off. So, ETH BTC has been in this giant, 600, 700 plus day range for the longest time. The fact that Shanghai is approaching so soon makes me cautiously optimistically bullish. But, I said at the beginning of last year or the end of last year going into this year, the 0.62, 0.58 level would be my ideal place to kind of sell some of my Bitcoin into Ethereum in preparation of Shanghai. But at this juncture, it doesn't look like it's gonna happen just because we've had so many tests of this mid-range that this mid-range has almost lost its, importance in my mind. It's just chopping around, right? Like, we have a range high sweep, we have a range low sweep, we have a range high sweep. Are we gonna do a range low retest? Potentially, right? Come into here and then go up or break down. But one thing I do know is that since we've been consolidating in this range for quite literally, um yeah, like almost 700 days, 670 days. Whichever way this range ends up breaking out and actually holding above and going towards, that is most likely the direction Ethereum is going to trend against Bitcoin. So if price, let's say it holds here, it goes like this, and then finally breaks out and holds it and moves up. Once we get this right here, I don't fade that, right? That tells me Ethereum is mega strong. I want to sell my Bitcoin for Ethereum, and I think Ethereum is going to be the faster horse in the race. Now, in the flip side, obviously, if we keep flirting with this mid-range, we chop around, we finally dip below, we come into that order block, we retest the mid-range, we flip it bearish, come down to the range low and break down. If this range low breaks down and we sweep, let's say, call it zero point 0.5, that tells me Bitcoin is going on a huge dominance run. I don't want to fade Bitcoin, or at least I don't want to be long ETH, right? So that makes the most sense to me how to approach ETH BTC. Now, what does that mean for alts? I guess a good point to keep in mind is, in my mind, that when ETH BTC is holding the mid or at least staying in the upper end of the range, this is good for alts. We've kind of seen that since August. So we've had a bunch of alt rallies in between. Now, if ETH BTC comes to the lower end of the range or God forbid breaks down, right, that to me would be extremely bearish, and I wouldn't necessarily want to be taking any alt longs in the short term just because I'm assuming Bitcoin's either going on a giant dominance run or we're just nuking to shit on everything, and alts will not be immune to that. So yeah, I'll take any last questions before I kind of wrap up here, and I'll give you guys a little overview of what else I'm looking at just before I close here. So besides Lido, that was one that I'm still in. Atom looks really good. SE kind of shouted this one out to me and said it had some signs of strength. So when SE says there is a coin that is holding up better than Bitcoin, that to me means I want to at least long it or pay attention to it. So I looked at the chart, on this daily or this hourly, sorry, we had 2 huge wicks that were just bought back up, and when you compare it to Bitcoin, Bitcoin made lower lows and then, Atom is trending higher. So if I look at the Atom Lick chart as well, if we look at the Atom Lick chart here, we see that it's not as skewed, long as a lot of the other coins that are like 4, 5, 10, 20 to 1 basically. This is just a 3 to 1. There's still a lot of short liquidity in the market. So what does that tell me? Well, we just had a huge move on Bitcoin. It looks like it's trending up right now. If we go back to 25.2 or, reclaim that 25.2 level we discussed, all these licks here from, call it, 13.5 to 14 are most likely going to get run. So if I'm noticing that the relative strength on Atom is strong in relation to Bitcoin, and I have a bullish bias that Bitcoin is gonna at least retest the range high in some shape or form, I want a long strength, right? So I punted a scalp long on Atom at 12.93, and then I added again, so I'm about $13 average. If we're gonna run to 14, that's a nice, whatever, 10%, 8% move, whatever it is. But point being is when I zoom in here, and again, we'll notice that we kind of broke down just because we saw all green circles come in and all liquidation levels were tested. Now we have a bunch of red that came in on the way down who have not been tested, right? We see short licks at 13.2, 13.4, and then as we get higher up here, we'll see those that kinda came in at the highs and shorted aren't gonna get a free ride. So 13.5, 13.7, all the way up to basically $14, we're gonna get a lick run, assuming that Bitcoin makes the move back to the range high, or above 25K, sorry. So Atom to me seemed like the ideal kind of asset to long to express my viewpoint that we are most likely gonna go retest the range highs, and I wanna be in an asset that is trending harder or showing relative strength as compared to Bitcoin. Sol, let's take a peek at Sol real quick. I know this is my buddy Josh Anomics' favorite coin to trade. Let's take a see here. Where's there it is. Alright, so Sol. Throw my little trends on, zoom out. So Sol, unfortunately, looks like it's breaking down from the cloud, although we do get a green cloud here. What I wanna see is it kind of flip this, daily key June, and then hopefully make a move up. But I'll look at the liquidity profile in a second. But just looking at this looks almost like a bearish retest, so I'm not that bullish on it, based on current prices, right? But let's take a look at the licks and see if maybe we can zoom in based on what we're seeing here and see if there's potentially something worthwhile looking at. So, gut bias, just looking at the chart, it's a bearish retest, but maybe we're looking for shorts, right? You have that short bias. Maybe that's a weaker asset, or you wanna short weaker assets against Bitcoin compared to stronger assets. I wouldn't short Atom, I'd long Atom, but maybe I'd short Solana. So if we look at the Sol liquidations, take a peek here. Alright, so it's 300 to 60, which is about a 5-to-1 ratio. We still have some big licks that I see here. So, if Bitcoin's gonna run the highs, there are some pretty big untouched licks, namely at 21.9, so call it 22. So yeah, I guess we could get a move higher, but maybe instead of longing it here, just I see a lot of long came in here, right? Basically all these longs, longs lows. So rather than maybe taking a scalp long to that level, I'd be interested to see when Bitcoin does approach the range high or get to 25K, can we maybe get a short entry along one of these licks, right? So 21.7, 21.9, maybe just above 22, right? So when I'm looking at the lick profile, it makes a lot of sense to kind of observe how and why price is moving a certain way. And obviously, the delta is skewed long, 400 mil. But I'm thinking about it from a game theory perspective, and I'm always thinking about, well, if Bitcoin's gonna do what I think it does, and we get to that level, and maybe it doesn't go higher, what am I hedging with, or am I scalping short with the highest potential hit rate or highest edge I have in the market? So that would be, setting ask along this 21.7, 22.2 area, seeing what hits. Maybe we don't go that high, but again, that's just kind of how I view liquidity. I guess the last one I'll do here is dot. Take a quick peek. Dot, dot, dot. Before I go over to the chart, let's look at liquidity here. All right, so just looking at it here, again, this isn't that skewed long as compared to others, right? It's like about a 3.5 to 1, 66 to 230. Now, zooming in though, I do see a lot of longs coming in at the lows, so I do assume that these will get tested at some point. But, looking higher, we have a lot of untested shorts, namely at 649 or 646, sorry, all the way up to 65, which even up to 66. So looking at the delta profile, I'm seeing that there is a potential for a lick run higher, again, assuming Bitcoin is gonna move higher, not lower. Now if we look to the chart, let's see here. Alright. So just looking at the hourly chart, very similar price action to most of the assets that we saw today, right? I think we have this move, part down, basically, this is like a beautiful top. Um, retesting a tanking here. Still in the cloud on the 4-hour, so that would be, the edge-to-edge trade would have been getting in somewhere here and keeping on this line. But since it's already kind of done that move, I wouldn't necessarily be bullish on it. It's in a quote unquote "no trade zone" for me. So, and again, if we zoom out to 12-hour, what happened? We rejected from the week, 12-hour key June. So I can't be that bullish on this asset yet, but do we get one more sweep of the highs, retest this key June and reject again? Potentially, right? So again, that's your 6.46 or 6.5, potentially 6.6 sweep. So I'd almost look at this area for potential short. Um, the first touch of the Kijun, the dynamic fib, makes a lot of sense in a lot of assets because the first test is always the best test. You usually tend to get the strongest reaction on that first test. So it sometimes behooves me to kind of leave bids or ask on, untouched Kijun levels. And generally speaking, if I do hit them, the position is usually instant profit if it is rejection, right, in the direction of the trend. So yeah, that's kind of how I approach liquidity in conjunction with Ichimoku, but mostly namely is looking at that Kijun, right? Like that Kijun is a dynamic 50% fib. So a lot of times, you'll set your fib and you'll see, okay, well, price is right there, for example. But the Kijun is nice because it moves down with price as price comes up. So, the mean of this whole move is right here. So as you can see, we made the high, made the low, Kijun trended down and flattened out here. So yeah, guys, I think that about wraps up the chart aspects of stuff. Happy to take any trading related questions. Other than that, I'm happy to just kind of wrap things up and take a quick look at the chart, see what I'm looking at. See the dollar kind of gapped up on the open, which does not make me a happy boy, but c'est la vie. I have been paying attention to the DXY a lot recently, especially when scalping. I've noticed that the inverse correlation between the DXY and Bitcoin is pretty glaring. And when DXY starts moving, Bitcoin starts thumping, and vice versa. So I do think as a scalper trader in crypto, it makes a lot of sense to pay attention to things that you might not necessarily have thought about before. Just because, man, like as I grow older and try to improve my trading, from being generally just a swing trader to now trying to become, or at least improve my craft and figure out where I fit within a range bound environment. I'm trying to add in tools that make sense, and watching the DXY in conjunction with Bitcoin has been helping me a lot lately to nail some of these scalps. So I guess that's my one piece of, quote unquote advice, alpha, whatever you want to call it. If you're going to be scalping any of these coins, watch the DXY in conjunction with Bitcoin because that will kind of give you the layout game plan for where price might go. So I guess the last thing I want to say, the short and sweet version is when I'm looking to scalp alts, what I'll do is I'll be looking at a chart like this, for example, looking at 5-minute on DXY Bitcoin, even ES down here just to get a sense for it, and kind of try to guesstimate where DXY is going to go and which way that's going to go, how that's going to affect Bitcoin. And then based on obviously my thoughts on Bitcoin direction, I'm going to be punting scalp longs or shorts on some alts that I think are strong or weak in relation to Bitcoin. So yeah, guys, I think that about wraps up things. Not much a question about charts, just about the halvening thing there. Are you talking about the halvening Bitcoin, Amos, or are we talking about the Kijun? Up above there? Are we talking about, I'm guessing, referring to the Kijun? Oh, I see. Okay, I see. Okay, yeah, yeah. In order for, let me put that up there. All right. It's a good one to end on. In order for a new all-time high in BTC to happen, do you think we need Bitcoin halvening in 2024 first? Are you a big believer in the 4-year cycle? Um, Absolutely, man. I've been in this space since 2013, actively trading it since 2015. And the one thing that I believe in wholeheartedly is in the Bitcoin cycle theory. Every, you know, bullish euphoria, pub bubble, euphoria, top, off top, etc. All these fundamental terms I've learned has been through participating in Bitcoin and the crypto markets. And at a fundamental level, I try to understand why price moves a certain way it does. And the Bitcoin halvening to me is the most fundamental reason why we have these 4-year cycles where we have, giant bubbles that go magnitudes higher and then they pop and then we see brutal sell off, right? 70, 80% down. So I'm a big believer in the Bitcoin cycle theory. Now, do I think for a new all-time high to happen, we need the halvening? Um, yes, I do. I don't think we'll make the new all-time high until after the halvening actually has occurred. Now, do we make an all-time high on the halvening date? I don't know. That is something someone I'm close with has shared with me as a thought. I don't know that necessarily agree or disagree with it, but, I've been in the space long enough to see cycles play out over a long period of time, and all it's told me is that, like, when I approach Bitcoin, when I approach the crypto markets, I try to keep in the back of my mind, where are we potentially in the cycle, right? So, January open, I remember shorting 17.6, getting stopped out 18.2, and then flipping Omega bullish at 18.4 just because I wasn't expecting the echo bubble to occur when it did. But, strong opinions loosely held, as they say for traders, and you have to adapt to the market. So when I zoomed out and thought about it, I said, okay, well, I did expect an echo bubble, but I wanted us to consolidate longer, form a nicer base because then we can go higher. But since we didn't form a long base, since we only spent like 60 to 70 days in that, deviation 15 to 18K post FTX, that tells me the base is not as large as it was during the 2019 echo bubble. So I don't expect prices or even the duration of the echo bubble to last nearly as long. So, the 2019 echo bubble was, call it February to June, July, essentially. I think we topped in June, maybe late July, early July. So I don't expect this echo bubble, start from January, it's gonna go till June, maybe May. I don't know, but I do think that it's gonna be shorter. So in my mind, I think we have a lot of macro events that also matter, right? So Bitcoin's never experienced a quote unquote recession. So at this point, I do think the echo bubble is still way, but I don't think it will last past May, right? So I'm actually a big believer in the whole sell in May and walk away, at least for this year. It makes a lot of sense to me. We have a whole bunch of, FOMC coming up next week. Maybe we're gonna pump into 28K, fill the steamy gap before then, and then kind of nuke after that. I don't know. But I am a big believer in Bitcoin cycle theory. I do think we need the halving to happen first. I don't think we get a new all-time high in 2023, unfortunately, but I am bullish for the future. I think that's kind of I'm gonna leave it at that. Bitcoin is a cyclical asset, it trades as such, and as such, the crypto markets trade as such. So it just makes a lot of sense that when you're approaching crypto, you're approaching Bitcoin, think of it from a cycle perspective. History doesn't repeat, but it often rhymes. That's something I like to try to tell myself. So keep that in mind. And yeah, man, that's kind of where I will end things off. It's been great, guys. I appreciate each and every one of you tuning in. And this is Captain Cole signing out. See you guys.